Welcome back into Market Day Report. This is the last time we're getting together for this show, MDR. Let's bring our next guest analyst in. That's Ted Seifried, Zaner Ag Hedge. Ted, thanks for being on the show. All right, what are your thoughts there? Anything jump out at you?
Well, every party has one, Scott, and today it is soybeans, just not able to hold on to any sort of early gains. We had corn and soybeans go right up to the first line of resistance, which was our 10-day moving average, and failed, both of them. Not great to see. What I will say, though, is that when you're trying to put in a bottom, even if it's a near-term bottom or whatever we want to call this, or whatever we're hoping for, a lot of times we do it in fits and starts. And this might be one of those fits and starts days where it's not a complete disaster. We didn't, reverse and close below yesterday's lows and things like that, or at least it doesn't look like we're going to. But it's certainly not as good as what we were looking at earlier. So I don't know. I think today's more a kick the can down the road or a punt day than anything else. I'm not willing to say yet that, the strength that we saw yesterday and earlier this morning is gone to the wayside and that we're back to, the epic march lower. Although I think, I'm not terribly bullish in the long run. I do feel like there is room here for a bit more of a bounce. But I will also caution that, bounces in bear markets aren't ever quite what everybody wants them to be. They never get to the technical resistance levels that we want to see. There's too many people that are waiting to sell into it, and there's a whole lot of cash that needs to move. So I think that would very much be the case in this scenario as well. So I think, again, we need to be careful. Again, I'm not throwing in the towel after today quite yet. But we gotta close this week higher. Otherwise, it's going to be really hard sell for any sort of correct bounce.
Yeah, I mean, we had some great volume yesterday. I think in the futures, 700,000 stuff. And we took a little bit off the open interest, but yeah, I think you're right. Probably a little bit too early. We need a little bit more evidence there. Get back with Ted Seifried, Zaner Ag Hedge. He's about to take off to get down to the Commodity Classic. Anything jump out at you? What do the livestock prices mean to you today, Ted?
Scott, you know what I'm going to say, right? There's not much moving.
Yes, yeah, there you go.
I know. Look, it's a quiet day. This is the second time in really 2 weeks where we've kind of consolidated up near these highs. And in particular, I'm talking about livestock, live cattle feeder count. And, had a nice run off the lows from December 6th. We've not had more than a 1 or 2 day correction ever since then. I think it would be healthy for the market to see that. Now, we had that bears versus expectations cattle on feed report last week. I think the setup is there to have a little bit of a pullback. Now, I don't think necessarily that's the high in the market and then we need to turn and go lower or challenge those December 6th lows.
Right.
But a little bit of a correction, just like we talked about in the grains. I think everything's ripe for a bit of a correction in the near term, short term. And then go from there. And then hogs just keep doing hogs things. They're kind of all over the place. You got to be impressed with what hogs have done since the first of the year.
I agree. All right. Thanks, brother. Great stuff. Have a great time down at Commodity Classic. If you see anybody I know, tell them I said hi. That's Ted Seifried, Zaner Ag Hedge in Chicago. We're going to go back here to Nashville and give it to you, Suzanne.
Just one more.